How's it going out there? It's October 19th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Talked about last week, the craziness of the markets. It's up, it's down, it's bearish, it's bullish. But I think we all could agree there's lots of risks in the marketplace right now. And you have to be concerned. We all see inflation, no matter what they say, if it's transitory or not. We all see it. You see the inflation risks. And you see the labor shortages where, just off of those two risks alone, you're seeing prices are being raised, say at your favorite restaurant, yet the service isn't as good because they have less employees, it's longer, it's sometimes, they even close it for days now to account for it. It's not easy to do. I mean, I changed my habits of different places that I've gone to because prices are higher, but I'm not getting the same service. You can't really do that for long. It's going to hurt a lot of businesses. I mean, some of them have pricing power, and that's fine. Those are big risks. We're saying stocks are expensive right now, peak earnings. Hey, we'll see. I mean, it's in the heart of earnings season right now. We've seen financials do well. Some companies do well. Procter & Gamble didn't really raise. You need to see beats and raises at these valuations. You just can't see beats. And it's tough to raise when you have supply chain issues. China numbers are slowing. I mean, how much is Evergrande going to be a problem to the real estate industry there? There's lots of stuff. And those supply chain issues, finally, I mean, we've been talking about them for a while. Now you're seeing them everywhere. I still don't think, just because we're talking about them, that there's no risk there because it's supposed to be bottoming and it's not. I mean, Apple just cut their iPhone production by 10%. And today, I get this report from IHS Markit, Markit, and they track auto production based on the supply chain issues and chip disruption. And they are the best of the best. This is where I've gotten a lot of information from, along with great information from you. I love hearing from you. A lot of you are within this in this industry. Sent me amazing emails months ago. Let me know how terrible it was. And these numbers are available to the CEOs of the auto companies and everything. And they were bullshitting you. They were lying through their teeth. Lying through their teeth to you 6 months ago. Saying, hey, this is a Q2 problem and we're good. No way. So IHS Markit publishes their reports and forecasts every single week. Every single week on Monday. And this Monday's report, they just lowered their production for Q3 and Q4 again. And even before this data was released, this is from Alex Partners, this is all over CNBC, this is about 3-4 weeks ago, said the auto industry will lose $210 billion in sales just this year due to the chip shortage. I think that number is conservative, considering IHS Markit cut Q3 and Q4 global auto production figures again. It's now predicted that auto companies will sell roughly 11 million fewer cars this year due to the chip shortage, which makes that $210 billion number, again, very, very conservative. So still lots of risks out there. But as analysts, we like buying stocks and buying sectors. For what we do, my job, our job is to always find the themes and areas that are working. Because even during the most volatile, risky markets, there's almost always something that's working. Almost always. Unless you have crazy, 2008, 2009 credit crisis, nothing was working. I mean, unless you short the market. And COVID, right? Everything just, came down together and didn't take long, month and a half. Big downfall. We started bouncing up right away. But usually there's things within the market that work. And here's some examples. I mean, look at banking. Our government injected $11 trillion into the market, and they're not done. $11 trillion. $11 trillion. So I saw a stat, and I don't know if it's true now. I want to look it up, but I think they said 45% of all the money ever printed was printed this year. I think it was 45, 50%. I got to check to see if that's correct. I saw an economist say that, and I was like, wait a minute, is that really true? And probably true. $11 trillion into the market directly to consumers and businesses. Giving them free loans. That's great for banks. It's great for investment banks. Money being invested like crazy. M&A everywhere. And rates are slowly rising, which is also really good for the net interest margins, right? They're going to expand. We took advantage of this at Curzio Research Advisor. Recommend Goldman at $200 a share a year ago, a little over a year ago. When everyone hated the financials, said they're done, they're in trouble. It's over $400, 100% plus gains. And banks still have huge tailwinds behind them, right? Rates are still low. Money's still pouring into the market. Energy is also working. I'll be the first to admit I missed this one. However, we have exposure to this trend through Dollar Stock Club, which is $4 a month. Basically, an introductory letter to show you what we're all about. It's $4 a month, which is nothing. Which is, you can cancel whenever you want. But $4 a month to get the best ideas from the people that I interview each week. We write a one-page report on it, include a buy-up to price, a stop loss. Got a lot of companies in portfolio. We're up 100% on oil and gas ETF, which is a play off Chris McIntosh bullish oil thesis. And this is about 9 months ago, I think, maybe a year ago. And something I was like, I don't know, guys. I don't know if I'm there yet. He was right. We took advantage of it, and we're up 100% on that. We also bought Texas Pacific Land Trust, which is an oil and gas royalty play. Those of you that have been following me for decades, this is my father's favorite stock pick. He recommended in the single digits. I don't know where it is now. Holy cow, it's like through the roof. But anyway, we bought that about 15 months ago. It's up 150%. And everything within energy is working. Even coal is working. But shale companies, majors, the services companies, the deep water drillers, everything within that industry is working. Uranium. We didn't miss uranium. And holy cow. I mean, it's been crazy since, what was it, last month and a half ago, Sprott launched his physical uranium fund. But now, just this week, Kazakhstan announced its own physical uranium fund. Going to buy physical uranium in the open market. Expects to raise $500 million just for this fund. They're following in Sprott's footsteps. And even if you don't understand, it's a fundamental change to the industry because it's hard to get like a spot price and price discovery. It's not like oil, natural gas, what you see. I mean, you can find out what the price is today, but it's hard to get price discovery there. And now it forces it where if there's a discount on these things, they're buying uranium on the open market. That's pushing prices higher. It's a fundamental change to the industry. Being able to buy physical uranium every time the price drops, that was never the case. And then you have the whole ESG movement behind that, where you have to throw uranium in there. It's one of the best clean energies, which is abundant, cheap, clean, safe, 24-hour base load, unlike solar and wind. UK this week, the UK adoption. They needed to hit the net zero emission strategy. You have Japan talking about bringing their closed nuclear plants back online. Big deal. Holy cow. And demand from electricity companies is surging. They must lock in prices now. And they have to do this or risk paying 20, 50% more months from now. And you look at the price is 47, 48. That's what it is right now. I mean, they say you need 55 to really break even. 55, maybe a little bit higher than that. But they were well over $120 a pound pre-Fukushima. And the market just went to shit since 2010. But conditions right now are much better than pre-Fukushima in terms of fundamentals, supply-demand imbalances, more countries adopting nuclear to satisfy their green energy needs. A much more better position than back then. We had Amir Adnani, who's, just totally engulfed in this industry his whole career. We had him on September 2nd when uranium prices were $33 a pound. It's now $48. It's close to 50% gains less than 2 months. We recommended the Sprott Physical Uranium Trust through his interview, and the stock's up 30% in 45 days. He's a chairman of Uranium Royalty, which we're up 85% in a Dollar Stock Club. And then we also have UEC in the portfolio. That was after, that's a Amir Adnani company, but I interviewed Spencer Abraham, former Secretary of Energy, who was a chairman of UEC. Again, not long ago, we're up 100% on that name. So, you're taking advantage of different areas. And hopefully you have exposure to this industry because this is not a short-term trend. And we saw a price go from 35 to 50, back down to 40. Now they're pushing 50 again. They're going to continue, it's going to be volatile, but overall, you're going to see a lot of names do very, very well going forward. And I wouldn't be surprised in 6 months from now if we see prices at $75. I wouldn't be surprised at all. And these physical funds, money's pouring into them. To wait for hedge funds to get into this market, it's very difficult for them to get into this market. There's not a lot of great plays that are volatile, that have enough volatility in them, other than UEC. And now you're seeing it. Now, other than Cameco as well, but Cameco and UEC are those two players that have the most volatility where you could trade back and forth. Now you have these funds. Now you're going to see more and more institutional money flow into these things and flow into this industry. So definitely not too late to get exposure. And then what else is working? Crypto. I'm getting tons of questions about Bitcoin. Of course, crypto's over 60,000 again. We've seen it pull back to 40 twice, I think, in the past 45 or 60 days. Now back up again. What do you think it's going to happen when it goes back down there? People are pissed they didn't buy it. They're going to want to buy it. Then we had the first Bitcoin ETF just getting approved, which is, I'm not going to lie to you, it's kind of a shitty ETF since it's futures-based. Tracking it is going to be tough given, the roll-offs every month. I won't get into more details of that, but it's not, well, ETFs, it's probably not the best one to approve right away, but that's okay. It's a bigger point. More ETFs are coming. And look, when you look at Bitcoin, whether you like it, whether you hate it, you don't understand it, whatever, and yes, there's a lot of BS in the marketplace, but there's also a lot of great stuff in there, but Bitcoin is the inflation hedge. It's the I hate central government hedge. It's the I hate Wall Street hedge. Hate global money printing forever hedge. And there's limited supply. And now you have banks, institutions, Wall Street, they're late to the party getting in. If you look at PayPal, Square, Visa, MasterCard, I mean, these guys have to adopt it. Not that hey, this is pretty cool. They have to, it threatens their business, the innovation. It's eliminating the middleman. For all payment financial companies, that's, all of Wall Street. Wall Street's a middleman. That's where you're seeing the most innovation come from by far is in the crypto industry. It's incredible. Goldman just filed to launch a DeFi ETF. It's like a couple months ago. What did they do, 13, 14 billion in sales or whatever for the last quarter? I mean, these guys don't launch an ETF unless they think it's a massive, massive market that can move the needle. And that's just one small part of crypto, which is DeFi. You're going to see security token ETFs, NFT ETFs. These are coming as well now that that approval has happened, which means it's going to go more mainstream, more people, more institutions get in it. Those are three markets that have massive tailwind. Maybe energy is getting a little toppy. Financials, the risk reward isn't as great as it was 6-9 months ago. But uranium and crypto, I mean, these are cyclical trends that I'm personally adding money to on pullbacks. If you're a CCI subscriber, we've done incredibly well in this portfolio. We have 5 companies up more than 10x. 2 of those are up 20x, and 1 is up 30x. We just have 5 names under our buy up to prices right now, and these 5 names I love since their plays on Crypto 2.0, which is the next phase of growth within crypto. And you look at DeFi, NFTs, Metaverse, security tokens. So you're listening to this, you're on our email list. I'm sending out a special video. It's an offer to subscribe to my crypto intelligence newsletter. And I've gotten a lot of questions, a lot of people saying, hey, what's the best price you could offer? So I put together a video. It's very short. It's not a long 40, 50-minute video. I think it's like 15 minutes tops. Watch it because you're going to understand why I'm so excited about crypto. I don't care if you subscribe to the newsletter or not. After you watch the video, you probably are because you're going to see exactly what I'm talking about because this isn't your typical, looking into the camera thing. I'm sharing my screen with you, showing you real time exactly what's going on in this market. And I'm also going to show you our crypto intelligence portfolio. If you're a subscriber, don't worry. I'm not giving away any of the stocks. I'm blotting them out, but you're going to see the gains, and it's the full portfolio. You'll see a few losses in there. You're going to see, towards the end, stocks we recommended or the cryptos recommended that I think have tremendous upside potential. And that's the full portfolio. And the point of this is what? It's to show you that as someone that's been doing it as long as me, for close to 30 years, I've never seen the gains that you could generate as a retail investor from a sector than this one. Never. And you'll see the proof. I mean, why is that? I mean, you're looking at a market where, as a retail investor, and I'm an accredited investor, I can get in some pretty good private deals. That's different. But as a retail investor that's not accredited and you're looking for the greatest returns, look where these IPOs come out. Where Robinhood, $38 billion valuation before you could buy it. Palantir, $21 billion valuation. Snowflake was up 100% on the open. That was close to a $70 billion valuation. It was the first time retail investors could buy Snowflake. You're looking at SPACs when they come out. Holy cow. I mean, you look at these companies that are merging with the SPACs, right, to become publicly traded, and you look at their valuation just 6 months before that. You'll be able to see it because these companies raise money. And once they raise money, they'll disclose this company raised money and at $1 billion valuation. And some of these companies would be $250, $300 million valuation 6 months ago. I don't know what changed in 6 months, not much, but they'll come out at $2, $3 billion valuations in SPACs. They'll inflate these things and do these road shows because they know they could sell it to the retail investor, and you're going to buy these things at crazy valuations. Yet, if you look at crypto, go to coinmarketcap.com. It's a free site. Just look at like the top 30, 40 of them and put a year chart and hit the market cap, not the price. You're going to see companies that were below $100 market cap that are like $15, $20 billion market cap, that are even into the billions in terms of market caps. I mean, you're looking at 20x, 50x, even 500x gains inside of a year. I'm not going to tell you that you're going to generate those going forward, right? Obviously, right? You don't know what's going to happen. Maybe crypto crashes. There's a lot of garbage. What I'm telling you is that from a risk-reward perspective, you cannot get those types of gains in the regular markets anymore. Yeah, you could get 300, 400, 500%. You'll see some of those in our portfolios. I'm talking about 20x and 30x gains inside of 2.5 years. When have you seen that? And maybe you bought Netflix 15 years ago. Maybe you bought one of these things, whatever, Microsoft back in the day, or you bought, and even if you bought, Google in the 80s when nobody wanted it, when it IPO'd, nobody wanted it. That was great for Google. Maybe you have an isolated example of you holding something for 15 years that did fantastic. But when you look at the gains in this sector and the fact that where the innovation's coming from, these big trends, and you're looking and say, wow, it's Bitcoin, it's Ethereum. Bitcoin and Ethereum, that was the foundation. That was the foundation of this. And when you're looking at the next stage of growth and innovation, I think of it as the internet. So the internet in the late 1990s, massive growth taking place, everybody going crazy. Everybody making a fortune before that crash. But I tell you something, streaming wasn't around then. 5G wasn't around. AI wasn't around. Social media didn't even exist. This is the innovation and the growth that takes place once the foundation, which was the internet, was built. The foundation is built. Bitcoin is here. Banks are forced to integrate it. It's already integrated in everything, so they can't shut it down without crashing everything. Limited supply. You're going to see Bitcoin continue to go higher. It'll pull back. It'll be volatile. When it does, you're going to see a lot of names go higher along with it. That includes some of the crap sometimes. And there is a lot of crap in this industry, so you need someone to guide you. But trust me, even if you're not going to subscribe to it, watch the video for 15 minutes, and I show you exactly what I mean of why the opportunity, which I've been doing this for such a long time, and I can tell you I can identify with every investor. I don't care how rich you are. I don't care if your portfolio is $1,000. Everybody is looking for the grand slam, and they're looking for it right away. And I've got those returns out of crypto. I've made millions of dollars off of crypto. I've been, I'm not just bullshitting you here where I base my company and my reputation on this trend where we have our own security token. So nice to see the industry going crazy right now. It took a little while, and I was on a fence going, maybe I was the idiot out there, and I didn't know what I was talking about, but it's here. It's disrupting everything. But this is the industry you're going to see innovation come from, and learn about it. Start learning about it. I know it's tough, especially if you're an older investor, you're set in your ways, you don't want to learn anything. Start learning about it, because it's not that hard to open an account. Technology is getting better. Now you have clearing. You have ETFs getting approved, the SEC coming on board. It's all happening. It's all happening, and it's still very, very early in a lot of the next phase. I don't want to call it crypto 2.0, whatever it is, but that's the next phase of growth where you're going to see DeFi, decentralized finance, where you're eliminating the middlemen and all these. It's why Wall Street has to get in. They make fees just by being a middleman. It's $80 billion industry already. $80 billion. It's like double marijuana, and it's going to grow 10x. It's a bigger market, growing faster, but everyone's like, marijuana, I got to get in. This is much, much bigger. DeFi is much bigger than marijuana. You know, security tokens is $500 trillion in assets that could be tokenized. These are illiquid assets where you could sell off a piece of them. If only 1% of that is true, that's a $5 trillion market. That's incredible. And NFTs, yes, there's a lot of crap in it, but it's pretty cool to get, you know, something digital and original from maybe Tom Brady, Michael Jordan, your favorite celebrity, Wayne Gretzky. I mean, some of that's really cool. It's a good market, but, you know, these are just opening up the possibilities. Then you have the metaverse. You have so many great trends. A lot of this only flows through crypto. So get involved. You will receive a video from me. And again, just watch it. I don't know if you subscribe or not. It is the best offer that one of the best offers. I think the best offer, I'm pretty sure, since we launched this, since, you know, launch was I think our best offer. That was 4 years ago for Crypto Intelligence. So you're not going to see a better offer than this. And when you see the performance, I should be charging a lot more for this, but this is someplace I want to get you in. Why? We're independent. I don't get paid by companies to recommend them. So if I don't show you gains, you cancel your service. So when we're pushing different products and services is because I think you can make a lot of money on it. Because if you do, then what are you going to do? You're going to subscribe to more of our products. That's what I want. I want you around for 20, 30 years. I don't want you around, you know, for a couple of days and wrecking you on some stupid story, which we see a lot in this industry, which is the reason why I started this company. Because there's a lot of bullshit out there. But it's a great, great, great opportunity. Here it is. Good price point. If you want to take advantage, fine. You have 7 days to do it. If not, no worries. Got lots of requests. That's why I put this together, and rightly so, because we're seeing crypto really take off. ETFs getting approved. It's really big. It's a hot theme right now, and I get it. But the next phase of growth is where people will get filthy rich if they invest in the right names. There's innovation there. These companies are coming out at very, very low valuations, or valuations where you're getting in near the ground floor, which you cannot do on Wall Street anymore unless you're an accredited investor and able to invest in a lot of these private companies. You'll see that probably tomorrow, next day. But again, 7 days if you want to subscribe. If not, no worries. But please, start learning about this trend. I've been saying that for over 2 years. And if you follow me, if you listen to me, even if you just bought Bitcoin, then you're doing extremely, extremely well, probably better than any stock that you purchased. And I think this is just the beginning. Bitcoin, Ethereum are yesterday's news. I think Bitcoin is going to continue to grind higher. It's going to go higher. Ethereum I'm worried about. There's other technologies that, including one in our portfolio that's an Ethereum killer. Everyone's switching over to it. The biggest companies are switching over to it. It's faster. You have no fees. We're even switching over to it. You know, so Ethereum, again, just different innovation going forward, and a lot of innovation, a lot of great markets. It's going to be very, very exciting. I'm excited right now, especially with security tokens, which we are right in the middle of. And subscribers to CCI are going to get a look at a lot of deals, because there's a lot of companies coming to us trying to launch this thing, and you can get in at discounts to these deals through new Reg A offerings, which means retail investors, even you can get into some of these deals, which would be discounted right before the IPO, or what they like to call the STO, the security token offering. So really, really good stuff there. Again, I'll come out in a couple days. But the theme here is focus on what's working. I'll say it again. I'm not sure if I'll go all in on energy right now. Financials, not crazy risk reward, but uranium, crypto is still very early when it comes to that growth potential, but find the themes that are working. Now, last week, I ran a little late with this. I didn't get a chance to answer some of your questions, which I'm doing a monologue, taking a few questions. So we'll do that today. Let's start with a question from John. He goes, hey, Frank, hope all is well. I had a question regarding Ethereum. I thought a few years back I bought some on Binance, but a few months ago I had to transfer everything out of it because the website said I'm a U.S. citizen. I couldn't trade on Binance, and I had to go to their Binance U.S. site. Have you heard of anyone else having the same issues with Binance website? I didn't see any Ethereum in my Binance account, and I checked Kraken, and I didn't see any there. Just wondering if you had recommended any other websites exchanges to buy Ethereum in the past. I also checked Coinbase. There's no Ethereum there that I had bought. Thanks, John. Okay. I mean, for crypto people who are in the industry, they'll be like, oh, you know, but for people who are starting, this is a good question. So Binance had to create a site called Binance US because, you know, regulations, and they can't just have all the crappy shit and garbage, which is, you know, they could trade that internationally, which is fine. So it probably went to their Binance US account. I would call Binance, and it should be in that account. But you could buy Ethereum anywhere. You could buy it on Coinbase. Coinbase is probably the best place. You know, a lot of these sites, you might have a little bit of problems, customer service, huge demand, but you know, it's Coinbase. You could Kraken, Gemini. I mean, get familiar with these sites. Even the BlockFi's you could buy. So many places you could buy Bitcoin. It's very, very easy right now. And this process used to take 3, 4, 5 days sometimes before they approve you. I mean, you don't realize this when you're opening an account at E-Trade, but they're going through the whole background check. Like, there's a warrant for your arrest, and you fill out an account, you know, you'll get someone knocking on your door, right? You get arrested like next day. You don't realize they're going through all these checks. You just do it so fast. Well, now they're doing these checks where it's anti-laundering, making sure you're okay, that you know your customer, KYC. They're doing all this stuff. This used to take like 3. Now it takes 5 minutes and less than a day to open up accounts on most platforms, including T0, the one we're going to trade on. So they say, hey, it'll take up to 2 days. We fill in information. You know, I did it, and it took about 5 hours, 4 hours to go through that whole process. And I was up and running. So, you know, try to use those sites, which would be better. I'm sure if you go into Binance US, or if you call them, they probably automatically place that in the Binance US account, or you might have to transfer it, or they transfer it for you. But yes, Binance took US investors off. They created Binance US, which is, you know, much smaller, you know, the amount of tokens trading there are not as big as the Binance site, but yeah, you should be able to trade on Binance US with no problem. Kraken as well, and you know, Coinbase, and that's where you could buy Ethereum by, I think Coinbase is over 100 now, maybe 120, 130. I don't know how many. I haven't looked probably in a month or two, but yeah, I mean, more issues being able to trade on that, and it's cool. You get familiar with it, and it's very easy to open an account. Start with a small amount. I mean, that makes sense. Let's go to one more question here. It is from Edith. She goes, hello, Frank. I thought to reach out to you directly as I don't have any knowledge or experience in trading stocks. Would you be able to advise me on how to start? I can only invest $1,000 and cannot afford to lose it. I would forever be grateful and become a prescriber for many years to come. Thank you so much, Edith. Prescriber. I don't know if you're a doctor, but if you're going to prescribe drugs to me for many years to come, damn, I might give you a Curzio 1 membership for free. You could go Adderall, fentanyl, Viagra, you name it. We got a partnership there. If I'm in. I have to say I'm joking now because people don't know that and they take that seriously. But I'm joking. Just kidding. Everyone's so serious now. But I think you meant, you know, subscriber, right? So subscriber for many years to come. I can't advise you, right? So I would, you know, if you have $1,000 you can't afford to lose it, I wouldn't put in the market. Again, you can't afford to lose it. So, and I don't care if you buy an S&P 500 Vanguard fund where the fee is like 0.1%, which is very little fee, which I tell, you know, a lot of people to buy and purchase just to, you know, you'll own the top 500 stocks, and that has done extremely, extremely well. It's over 65 years, 60, whatever I think it's in the 50s when it became 500, and, you know, you're looking at 8% average returns annually with dividends, a little bit more than that. Again, you have your ups and downs, but it's been solid. It's paying, I don't know what the yield is now. Is it 1.7, 1.8, or whatever it is? But yeah, that's your best bet. But at $1,000, if you can't afford to lose it, then I wouldn't go into the market right now. I mean, yeah, that's the best advice I give. I would focus and look at all of our free stuff on our site. I don't want to charge you for a newsletter. We probably have the best free content out there. And you get lots of ideas. This podcast is for free. All these podcasts are for free that I'm doing. Tuesday, Wednesday, Thursday. We have great interviews. You get lots of stock picks, lots of ideas. You can go to our website now, which is redesigned, which is awesome. So you're seeing content every single day now. It's not just a member site, which it used to be where, you know, members go there and they'll log in. It's, you know, we're becoming a media company now. So there's content on it every day, original content, really, really good. And now we can get outside contributors to participate. Hire more people to write more. Now it gets bigger and bigger, provide quotes and stuff like that, and build a whole site. And you know, that's our direction. That's where we're going. And I would focus on that. But yeah, at $1,000, Edith, you know, just be careful. If you can't afford to lose, don't ever put any money in the market you can't really afford to lose. Again, because I don't know where the S&P 500 is going. I'm sure you're not going to get crushed. I wouldn't say you lose more than 20, 30% right away, but either way, you have to be very, very careful. And, yeah, I mean, I really wish I could tell you more, Really wish I could tell you more. If you have like $5,000 to invest and you're investing, you say, hey, this is money I put aside, or in your 401k, which, is long-term and stuff like that. It's different. You put them in certain areas. You can separate it. Even $1,000, you could put, $100 in 10 different situations. But the key to this is you said you can't afford to lose it. And if you can't afford to lose it, then I wouldn't even put it in the market. The market is a dangerous place. It's very volatile. And the last thing you want to do is put money in the market and look at it every single minute of every single day, because that means you have too much in a stock or too much in the market. Because if I looked at every single day, I would have sold out all my uranium picks. I would have sold out all my gold picks that I had 5, 6, 7 years ago that I have 5-year warrants on that all came back, in 2019 and stuff like that. I wasn't looking at this until I was like, hey, in 5 years, I think gold's going to be fine, and it'll definitely go higher. And a lot of these stocks have done well, even though gold's kind of crappy right now as a sector. Same with crypto, the ups and downs. And uranium, I've had, I'm making a lot of money on uranium, but I've had these things where they sat there for 3 years, 4 years and did nothing while the market surged. But I had exposure to other things in the market that did great, and I was diversified. So I was saying, my friends in Vancouver, it's gold and silver only and mining, and that sector's been so terrible such a long time outside of a couple periods. When that cycle changes, it's great. People make a fortune, but otherwise you're sitting there watching everything else in this market. Our markets go crazy, going through the roof, and you're sitting there in one sector. You have to be diversified. But saying you can't afford to lose it, I would say don't put it in the market either. So sorry I couldn't help you more, but start learning as much as you can for when you build up the capital and you want to put it into the market. You could do that by our free site. And there's other good free sites out there too. Just, be careful what you read out there. Okay, guys, so that's it for me. Again, it's CCI promo, which is Crypto Intelligence. A great video. It's a short video. I kept it short. I'm sharing my screens with you. Just take a look and you're going to understand why you're going to see the massive upside potential you have in this. And some of the gains that you can capture, which are very difficult to capture these days in the market and going forward because of the valuations they come out. But I think crypto, this is just the beginning. The foundation has been built, and there's amazing growth trends, amazing innovations. The contacts I have in this industry have been unbelievable, fantastic, write to me all the time, and I thank them all the time. Again, I'm all in on this industry. I love the direction it's going. I'm very happy with the decision I made. I'm very happy for my investors, and I want to see you guys make money. And this is a sector that I really, really like going forward for a very, very long time. So like investing in the internet in the not early, but mid-1990s, and even 2003, 4, 5, 6, when it really started taking off again. And all these trends just started getting bigger and bigger and bigger. So really, really cool stuff. Questions, comments, feel free to email frank@curzioresearch.com. Really appreciate all the support. And I'll see you guys tomorrow. Take care.